Hello friends, I'm currently in travel mode, so poor Mike and on my laptop, but we're gonna make it work. I'm in Tennessee at a lake doing some college bro time. So we're gonna look at a few names here, not everything in the sector, is gonna talk a little bit about the general overview. So today showed us, number one, the importance of the broader market. It was an extremely weak day. Pretty much, if you drew out what could be the worst possible day that the market sees tomorrow, aside from a black swan news event, today is what that was. It was just complete bear control the entire day. The NASDAQ leading the way down, extremely weak, and just no confidence from the bulls at any point during the day. And so that adds a lot of downward pressure on things. The most notable takeaway for me today is the difference between Canadian and US cannabis names. And if you've been following this sector for any period of time over the last bunch of months, it's a common theme where fundamental investors are often frustrated at seeing the Canadian cannabis names get the attention, get the volume, get the price action, and the volatility, and rightfully so, in terms of, why is US news having CGC and TLRY respond more bullish? But today that changed very, very drastically. And today was one of the most bearish days I've ever seen on CGC. I've been watching CGC, I'd say 90% of every single trading day for the last 5 years. And this was a very notable day for me. Big money was shorting CGC and they just had it by the neck. They had a firm grasp of control and they just drove it into the ground. And you could see they were just stacking the ask and just knocking it down, just full control. And you saw USMJ names also see profit taking, which isn't surprising. From the video yesterday, we knew to be profit taking. I let you all know I was going to be spending my morning taking profit. But it played out a lot differently as how that profit taking shaped up on both sides of the border. So I'm almost wondering, are we seeing big money? Because again, it was big money in institutions on CGC. You don't see this kind of volume of, how many shares are we talking? 56. So yeah, 150, 180 million, something like that, very roughly speaking. That was the total dollar volume. And again, look at the huge move. We gave back everything from yesterday and then some and closed at the low of the day. So I'm wondering if some big money might have gone long USMJ and then shorted Canadian cannabis as a bit of a hedge. TLRY had earnings this morning. It kind of shrugged it off to start the morning. And we were still up pre-market in response to those earnings for a good bit. We were bouncing around, but we were hanging around where we closed. And it's all speculation for me because I don't know what big money was doing aside. I know they were shorting CGC, but I'm curious because the play today was obviously go long USMJ and short Canada. And it would make sense, that big money would look to do that if we're finally getting some catalyst for these US companies. But anyways, that's speculation. Let's look at price action. I'll let you know how I ended up trading today. So the S&P 500 rolling over, inside bar bear break, and we're testing the fear lows. And the number one thing that can squash any momentum anywhere is the broader market hitting fresh fear lows and fear getting elevated again. And that's on the table. Early next week, we're going to test this 357 low first thing, and we have less than 2% of space to work with. So the bears are keeping their complete control. And you've heard me say 100 times, we have to change the daily trend for it to be meaningful, and we're not doing so. We would need a complete 180 turnaround next week. Next week, Wednesday, we have CPI numbers. That's going to be the event of the week. And that could see a catalyst. The market really wants to see inflation knocked down. The bearish reaction this morning was to job numbers, and the job numbers indicating that we're likely going to see continued rate hikes. And the probability for a 75 basis point rate hike next meeting increased after the job numbers came out this morning. And that's the biggest reason that you have the significant bearish reaction to those numbers pre-market today. So Wednesday is going to be notable, but the bears are very comfortable at this point. And for anything to change, SPY bulls would have to break 379.46. So the simple statement is, if we are not breaking that level, nothing is changing and the bears keep complete control and confidence. The dollar is still in a daily uptrend. Daily higher low is set, and we are looking at the recent high. The only way things shift here is if we confirm the daily downtrend. If we do not confirm a daily downtrend, nothing changes. The bulls keep complete control, and we can definitely see higher highs. So the key support is 110.05. As I mentioned in the video yesterday, I had a bearish swing position on the S&P 500, and I closed out half of that, but kept a decent chunk because bears had complete control all day. So I've got a little bit of bear exposure in my swing position. And as I mentioned yesterday, I think in the video I said, by the time the morning rolls around and after we see a bit of trading, I might be down to 15% of my position. In the end, I was all out of cannabis by 9:35 a.m. I sold some after hours at 7:45 p.m., CGC $4, and MSOS over 13. I sold some pre-market, MSOS over 13. I have these orders here just so you don't have to take my word for it, but I'm going to, if you want to pause and look at that, go for it. But exited MSOS above 13, essentially my whole position, and then started to add it back down around $12, which was a bit early, but exited GTBIF at 14 right at the open, sold some CGC right before the open, 384. So essentially I was all cash as far as cannabis is concerned by 9:35 a.m. I did a great job of profit taking, but I only give myself a B on this trade the last 2 days because I did start to enter a little bit too early. And the distinction for me is, we've seen this play tons of times. You close at the high of the day, you gap up open, you sell into the gap up open, and then you add the oversold drop that results from that gap up open. And then ideally, that marks an hourly high or low, and then you head to higher highs and the move keeps going. In a bull market in 2017, 2018, Canadian cannabis, that was happening. The broader market was picture perfect for that breakout, and there was a lot of confidence in markets. Today, we are in a very different environment. And so there was a lot of fear today, and so there was not the gung-ho dip buying that you would see on a day where there wasn't fear. If the broader market was up 1% today, we would have a very different landscape of how today would have played out. But it is what it is, and it's frustrating for the bulls, but we have to accept what it is. And this is why I am trading this sector and not investing, because of this kind of volatility. So my mistakes were, I went to play the CGC bounce. It was a mistake, but then a good recognition, because I went to play this CGC bounce, 5-minute oversold conditions. Okay, I'm interested. I'm interested to play a bounce. My first entry is at 341. That is too early. So I say, all right, I'm making a first entry at 341, and I'm going to make a second entry in the 320s if we keep dropping. And that'll be my position. And because I am not playing off a stop level or a support level, my stop loss will be based on dollar risk that I'm willing to take on the trade. And I started to recognize clearly CGC was a lead bear. It was weaker than its Canadian cannabis peers, and it was weaker than USMJ peers. And so rather than making my second entry and sticking with it, I said, nope, I'm done here. And by the time we hit a new low, I think I used this 319 level, and by the time we dropped down and broke that, I stopped out. And it was a bit bigger loss than I would normally take position size wise, because yesterday was such a big day in terms of having large positions and playing that bull move. So it ended up being a couple day loser after a many week maker yesterday. But I do like how I recognized relative weakness and said, nope, I'm focusing on MSOS to play the bounce because CGC does not have it. And that saved me from trying to play this bounce all day, which is never a good thing. So we had some short covering at the end of the day, but then we rolled over again into the close. So as far as I'm concerned, again, if you are long this sector as a swing trader, hedge shorting cannabis names. Only if you know how to trade, of course, and that's what we do, is try and help you with that. But someone asked me this morning, I think it was, if I'm looking to hedge my long positions, should I short the broader market or should I short the sector? And my answer was short the sector, because the sector move is going to be much more significant. The broader market, a big drop is 3%. Obviously, the sector shows a big drop is 20%, 25%. So if you are hedging, that is one way to look at it. Short the weaker names and long the stronger names. TLRY, not as weak as CGC, but almost. Earnings gap up open for profit taking and never any sign of any kind of convincing bottom. There were decent bounces. You had a better chance of getting a decent win or at least a break-even stop out on this bounce versus what CGC gave us. But again, somebody was just hammering CGC and stacking that ask and not allowing a bounce to take place. So US cannabis, Looks all right. Doesn't look great, but considering the day that we had out there, it looks all right. One thing that the bulls have to be cautious of is if we see broader market weakness first thing next week, and if we fail the high, what's the high? MSOS, we've got resistance of 13.13, and then the after hours 13.55 are the two key levels. If we fail 13.13 and roll over and break 11.26, that's a confirmed hourly downtrend, and daily consolidation will very quickly be underway. And then the bulls have to change the daily trend if this move is going to have any staying power. I do believe that the bottom is in for a while just because of how many shares have churned between $10 and $13. It's a lot of volume. But the broader market's going to dictate things. If we drop 10% over the next 3 weeks in the broader market, then the sector is going to fade back down. So the broader market is going to be key here. Obviously, any headlines and news will be key as well, but I'm not holding my breath for that. I would love to see, in an ideal world, we get some descheduling or rescheduling news before the votes, and then we get a little bit of momentum into individual states passing recreational and medical. But again, I don't base my trades hoping for news, personally. So for MSOS, the way that I played this was I definitely started scaling in too early here as well. And so I made my first entry 5 minute oversold, and my first entry was, I forget, 1240s, maybe 1250. But it was just a little starting piece. So that was, 25% of what I was willing to take on. And then I made a second entry when we broke $12. Oh, you saw my orders there. So I entered some right around 12, some just under 12. And what these bounces allowed for was positioning. So me as a day trader, this is everything that I wanted because, on this bounce, I know a 5 minute lower high is the most likely scenario. So I was just flipping. I had the core position that I wanted, and my average was about 12.15 to start. And this was ideally an hourly high or low is set, and this is going to be my swing position. Then I have day trading positions where I look to lower the cost basis of my swing trading position. So I flipped this at least 4 different times where it's the same position size, but 1175 was support from yesterday. Look at this hourly consolidation, 1174. So I was playing off of that. So I played, we had a new low of the day, breaking 1186 without much follow through, and we defended support. So I make an entry, and maybe I enter it, 1186, and I sell half at 1195. So just under 1%, just trying to get those little quick flips. But if I flip it for 9 cents, my average is now from 1215 down to 1206. And then same thing, a new low of the day with no follow through. Yeah, we broke that support, but only by 2 pennies. I consider that a double bottom. That's a 4% bounce. So if I get 1% out of that, I lower my cost basis now to maybe 1190 of my swing position. Then once 1172 broke, we don't have any support levels nearby. So that tells me be more patient on this next bounce attempt that you look to play from here. And so I entered some in the 1140s, and I did get one fill, 1128, and then sold that on this bounce. So I ended up with a swing position with a break even of about 1270 to 1275. Nope, 1170 to 1175. And that came with a lot of work because I was working all morning just flipping and managing that position. We were looking great into the end of the day, but then we had that little sell-off that we become accustomed to in the USMJ sector, which is, hedges being taken off or whatever is going on there, but a big solid drop into the close. So really what it all boils down to, and I will be back to all cash and have 0 MJ exposure if we see an hourly downtrend confirmed. 1126 is a must-hold level on Monday. If 1126 breaks, the bears start to regain control, and we start to give back the vast majority of this move. We look at the retracement size using Alt-F to see Fibonacci retracements, and we can see from where we got to after hours, we've seen about a 50% retracement or so. And if we confirm the hourly downtrend, that retracement is then going to be 60% plus, and it's just less ideal. If we want to see continuation, we want to see as little retracement as possible. So key resistances, end of the day is now a key level, 1252, 1313, and key support is 1126. And again, I will very quickly be back to all cash if the bears take back over, and then we'll take it from there. So one thing we know about the government is good news is great, but things take a lot of time to play out, and shorts are going to take advantage of that. And so taking profit on the way up is always a good idea in my opinion, especially when the move is that fast and that hard. I know if you don't have a lot of experience, it's really hard to do and you don't want to be left without a position, but don't trade then and let this be your experience, because I'm trading in the Chart Guys chat room with dozens and dozens of people that I've been trading with since the 2017, 2018 run for the last 5 years. And so we're a lot more comfortable buying and selling these moves. And again, my main takeaway from the video yesterday was I don't care if I leave money on the table. If I'm going to make a mistake, it's going to be leaving money on the table because I sell too soon and it keeps going up. And that's fine because I don't lose anything. I just miss an opportunity. And there's plenty of those in this market over the years. The mistakes I'm not going to make are giving back the hard-earned profit that I already have. So all in all, it was a good end to the week. My exposure right now, position sizing wise, is probably 20% of what I swung yesterday and what I was offloading after hours and first thing on the morning. And that's that. Broader market is weak. I don't have a ton of confidence until we get some confidence in the broader market. Feel free to ask any questions. I appreciate you watching. I hope you have a great weekend, and we'll certainly keep an eye on the sector. And if I don't make sector-specific videos, I will still talk about it in the broader market end-of-day videos that I do Monday through Thursday. So make sure and check those out. Have a great weekend. Do good things.